There's a lot of economic data due this week. A lot of it won't look good. But does that mean an imminent recession? In this next report, we dive into the clues investors will look for in the week ahead. Take a look.
What's the probability of a US recession? Those bets have seesawed in line with market moves this year. While trade uncertainty is still soaring, a recession is not a high conviction call at the moment. Even if media reports turn out to be true and China and the US roll back, some of the tariffs on each other, the trade rates will still look uneconomical. It's not looked great since the immediate aftermath of COVID. Back then, when the manufacturing surveys started to fall, talk of a recession began to rise rapidly. Yet the economy powered on regardless. It was a reminder that manufacturing isn't the dominant economic force in the US that it once was. Consumers powered the economy post-COVID. But with savings and confidence down and delinquencies up, the consumer is not positioned to absorb the costs of supply chain disruption this time around. In Asia, investors will track what the Bank of Japan does, and more importantly, the tone of the central bank will dictate yen moves. In broader markets, a dollar gauge marked its worst performance during the first 100 days of a US presidency in data going back to the Nixon era, when America abandoned the gold standard. But treasuries rallied as investors pinned their hopes to signs that the US-China trade confrontation may be starting to cool. There was also some pleasant news in equities towards late last week. But will that last? Much will depend on the course of US-China policies. Business Bureau, WION, World is One.
All right, for more on this and for more updates, we have with us Mark Matthews. He's the managing editor at Bank Julius Baer and Company, and is a prominent Asian markets expert who is now joining us live from Singapore. Mark, thank you so much for making time and joining us here on World Business Watch. What's your view on a possible US recession?
Well, there are various companies that track the likelihood of a recession, mostly based on surveys. The University of Michigan, the Conference Board, there are several Federal Reserve banks, Richmond, and what was the other one? New York, that track it, and industry groups. Reuters does it. And broadly, they give about a 40 to 60% chance of a recession happening. Our own recession indicator that we have internally at Julius Baer puts it at about 50%. There's two kinds of recessions. There is a very, what you would call deep and structural recession that is usually triggered by a systemic imbalance that cascades into the broader economy, like the global financial crisis. And then you have cyclical recessions that usually happen because there's been an increase in inflation, decrease in demand. Right now, I think if we do get a recession, it'll be that cyclical kind. And the reason I say that is the reason it would happen, we know, is because of tariffs increasing prices. And that would result in a decrease in demand. And politicians would very quickly put an end to the tariffs in that event that they caused a recession, because otherwise they'll lose their popularity and they'll lose their jobs.
Understood. Mark, do you feel the recent market rally, is it possibly hinting at a soft landing for the US economy?
Well, not just a soft landing, because the S&P is only down 6% so far this year. And by the way, that's after having gone up about 23% in 2024 and then 23% in 2023. So it's not pricing in a soft landing, it's pricing in a very good economy. And I suppose that it could be right. We already saw last week, in the earlier part of last week, that the US is relaxing some of the tariffs that it had put on China. And then on Friday, China relaxed some of the tariffs it put on the US. Behind the scenes, it's pretty obvious there's a lot of talking going on. So I think it is entirely likely that it can be avoided. And in fact, one thing I would say is if you look at the container shipments from China to the US, they were very big in March and most of April. In fact, you'd only have to have 2 ships crossing the Pacific in May for us to be at the same number of container ships from January through the end of May for all of 2023. What I'm trying to say is they've already stocked up a lot of inventory. So I think that if the tariffs are resolved, we can avoid a recession.
I understand. But you still see it as a 50% chance. That's what you mentioned, if I recall correctly. 50% is what Julius Baer and company was pegging the chances of a recession to be at this point. In case that comes true, in case the US is in recession, how do you reckon that would affect emerging economies, and also anything specific that you can share on the impact that possibly India and China would have?
Well, my guess is that it would mean that the Federal Reserve cuts rates. And we are actually looking for 2 large rate cuts this year. We're looking for 50 basis point cuts twice this year. So that should mean continued weakness in the dollar. And historically, continued weakness in the dollar has been a positive thing for emerging markets and Asian markets.
All right, Mark, thank you so much for joining us here on World Business Watch, sharing all your insights. It's a 50% chance at this point. Whether there is going to be a US recession or not, we'll need to wait and watch. Would love to have you on the show again.